Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Stuart, Katz, Chief Investment Officer of Robertson Stephens Wealth Management, to discuss the future of the 60/40 portfolio and how Bitcoin can fit into one's portfolio. Stuart, it's great to see you again. Welcome back to Trade Talks.
Great to see you as well. Thank you for the invitation.
All right, you got it. And let's talk about that. The future of the 60/40 portfolio. Does it have one?
Yeah, so Jill, it's time really to rethink and to redesign the 60/40 portfolio. For decades, equities and bonds worked well together in a portfolio, given their long-term negative correlation with each other. However, given how expensive fixed income is, how tight the credit spreads are, bond prices are more likely to fall in a rising inflation and growth expectation world, and equity price earnings multiples are going to compress. So it's not providing the kind of role it has in the past.
And Stuart, with mass adoption taking place in Bitcoin and other digital assets, investors need to start thinking about it within their own portfolios. How do you think it fits into that?
Yeah, so in the rethink and the redesign of the portfolio, it's always important to ask oneself when introducing a new asset class like Bitcoin, what role does it play? When you're constructing a team, everyone has a role to play on the team. So what role can Bitcoin play? And we see advantages for Bitcoin, given that it has a very highly volatile return profile. And Bitcoin is not an ideal candidate to provide ballast or obviously income as a substitute to fixed income. But for certain investors, they're trying to think of it as a safe haven asset or even a diversifier. But when you look at the maximum drawdown in regards to the equity markets back in February and March of 2020, Bitcoin fell by a similar amount. So it's important to have your eyes wide open in terms of the role Bitcoin can play. We do think it can play a diversifier. Its correlations over time have demonstrated that they're low relative to other asset classes in the portfolio. And as long as it maintains that high volatility profile, we think of it as a call option on returns in the portfolio and could be attractive for certain investors.
How are regulators reacting to the increasing use of Bitcoin and other cryptocurrency?
Yeah, so given some recent activity in terms of exchanges related to Bitcoin and other cryptocurrencies, and just given the absolute price and relative movement and momentum within the cryptos, global regulators and policymakers in the US, in China, and in many other countries around the world are increasingly more aggressive in overseeing what's happening in crypto, and in fact developing their own digital dollars, what's called central bank digital currency. And so 50 to 60 different countries right now are at various stages of launching or having their own digital currency. India in particular is starting to ban trading of cryptocurrencies. And here in the US, from a regulatory perspective, I would say a few things. One, keep an eye on the new SEC chair, Gary Gensler. He has very strong opinions around cryptocurrencies in terms of transparencies and disclosures. The IRS chairperson this week just said that he believes there's certain tax revenue leakage going on because of cryptos. And if you lean on history, the Gold Reserve Act of 1934, take a look at it. The US government made it illegal to own gold. And so if they want to pull that playbook out, if they're concerned about what's happening with cryptos, it could potentially be updated for Bitcoin.
And to wrap up here, let's play some bull and bear case here. Bitcoin, despite the move it had in February and March of last year, year over year, it's up 840-ish% as we speak now. Do you think there's still more room to go here? What's the bull case?
Yeah, so look, the bull case is that this is outside of government oversight, can't be manipulated by central banks, especially central banks that are aggressively around the world devaluing their own currencies with the printing of money. It's a scarce resource, approximately 21 million Bitcoins. There's maybe another 2 million or so that are left of the 21 to be mined. Bitcoin could become, similar to the US dollar potentially in the form of a fiat. Wealthy people sit there and say, you know what, if pension funds and institutions and individuals just allocate a small percentage, across all their portfolios, that will create an extraordinary amount of demand. And you're now getting increasing access to Bitcoin through ETFs and other kinds of vehicles and structures. The bears jump in and say, look, this has no intrinsic value. There could be a superior cryptocurrency to come and replace potentially Bitcoin. The regulators, like we said, the tax authorities. But in essence, there's also an issue in regards to thinking about the concentration, not only in the holders of Bitcoin, but the miners being in Russia and Belarus, Ukraine. There could be some issues there. And then I think in light of us having Earth Day this month, we should be mindful of the fact that there could be some environmental considerations. A lot of electricity and energy is required to mine Bitcoin. And for those people who are looking to do something that is, quote, green, that's an important consideration as well.
All excellent points, Stuart. Thanks for the insight as always, and thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.